Investing in real estate can be incredibly rewarding, but why choose it over other investments? Today, we'll cover the top reasons to invest in real estate and a few drawbacks to consider. Real estate isn't completely passive and requires some work to get started, but don't worry, that's why I'm here. Let's get started. The number one reason I love real estate is the cash flow potential. Rental properties generate additional cash flow month over month and allow you to build a portfolio of long-term stable assets. House hacking is another advantage, where you use rental income to cover living expenses and pay down your mortgage faster. Many new investors buy duplexes or houses with additional dwellings to make extra cash. If you don't have enough for a down payment, consider partnering with someone who does. You could manage the property, find tenants, or do renovations in exchange for equity. Check out the link below to learn more about my company, Buy Properly, which allows investors to start with as little as $2,500. Another benefit of real estate investing is the high return from house flipping. This strategy involves purchasing properties at a lower price, often because they need significant repairs or updates, and then selling them at a higher price after renovations. The key to success in house flipping is to find properties that are undervalued but have the potential to be transformed into desirable homes. Flipping is more work, stressful, and risky, as it requires a keen eye for detail, a good understanding of the real estate market, and the ability to manage renovation projects efficiently. The process can be overwhelming, especially for those new to the industry, as it involves coordinating with contractors, managing budgets, and ensuring that the renovations are completed on time. But it can be profitable if done right. Successful flippers often see substantial returns on their investments, making the effort and stress worthwhile. The satisfaction of transforming a rundown property into a beautiful home and then selling it for a profit can be incredibly rewarding. Flippers look for undervalued properties in great neighborhoods that need renovation. These properties are often found in up-and-coming areas where the potential for appreciation is high. By investing in these neighborhoods, flippers can capitalize on the rising property values and demand for housing. Once renovated, these properties can be sold for a significant profit in a short time. The goal is to complete the renovations quickly and efficiently, minimizing the holding costs and maximizing the return on investment. Timing is crucial in house flipping, as the longer a property sits on the market, the more it costs the investor. It's not easy. You need to find the right properties, renovate on a budget, and manage the entire process effectively. This includes everything from obtaining the necessary permits to ensuring that the work meets local building codes. Attention to detail and careful planning are essential to avoid costly mistakes and delays, and sell for a profit. Marketing the property effectively is also crucial to attract potential buyers and achieve a quick sale. This might involve staging the home, taking professional photos, and listing it at the right price to generate interest and competitive offers, but if you're willing to put in the work, flipping can be lucrative. The potential for high returns makes it an attractive option for many real estate investors. However, it's important to be realistic about the challenges and be prepared to handle the unexpected issues that often arise during renovations. Remember, I'm a long-term investor at heart. I prefer the stability and steady income that comes from holding properties over time. This strategy allows for gradual appreciation and the benefits of rental income, which can provide a more predictable return on investment. I prefer to buy and hold properties for the long haul. This approach requires patience and a long-term perspective, but it can be very rewarding as the properties appreciate in value and generate consistent rental income. But if flipping is your thing, go for it. Just make sure you do your research, understand the market, and have a solid plan in place. With the right approach, house flipping can be a profitable and exciting venture. Just be prepared for the challenges. The road to successful house flipping is filled with obstacles, but with determination, hard work, and a bit of luck, you can achieve great results and enjoy the financial rewards that come with it. Another huge benefit of real estate is appreciation. Over time, real estate tends to go up in value due to limited land supply and a growing population. The principal amount you invest will grow over time, making it a fantastic long-term investment. Investors who buy and hold properties benefit from predictable appreciation year over year. Depending on where you buy, you can expect annual appreciation rates from 2% to 8%. In Canada, there's been an average 6.11% annual appreciation over the last 15 years. Real estate always recovers, even after market crashes. So, if you're looking for a long-term investment, real estate is the way to go. Another major advantage of investing in real estate is the tax benefits. These benefits can significantly enhance your overall return on investment, making real estate an attractive option for many investors. By understanding and leveraging these tax advantages, you can maximize your profits and minimize your tax liabilities. You can deduct things like depreciation, mortgage interest, operating costs, repairs, and property tax from your taxes. Depreciation allows you to deduct a portion of the property's value over time, reflecting its wear and tear. Mortgage interest deductions can be substantial, especially in the early years of a loan when interest payments are higher. Operating costs, such as utilities and property management fees, are also deductible, reducing your taxable income. This means you get to keep more of your hard-earned money. By reducing your taxable income through these deductions, you effectively lower your tax bill, allowing you to reinvest those savings back into your property or other investments. This compounding effect can significantly boost your wealth over time. For example, if you charge $2,000 rent per month and incur $1,500 in tax-deductible expenses, you'll only pay tax on the $500 profit. This scenario illustrates how powerful these deductions can be in reducing your taxable income. By carefully managing your expenses and taking full advantage of available deductions, you can optimize your rental income and enhance your overall financial position. It's vital to keep good accounting records on your investment property. Accurate and detailed records ensure that you can substantiate your deductions if questioned by tax authorities. This includes maintaining receipts, invoices, and other documentation related to your expenses. Good record-keeping practices not only help you stay compliant with tax laws, but also provide valuable insights into your property's financial performance. If you're claiming maintenance and repairs, keep those receipts as proof. These records are essential for demonstrating that the expenses were necessary and directly related to the upkeep of your property. Proper documentation can prevent potential disputes with tax authorities and ensure that you receive the full benefit of your deductions. The appreciation of the property will be assessed when you sell it, and you'll be taxed on the capital gains. Capital gains tax is calculated based on the difference between the sale price and the property's original purchase price, adjusted for any improvements made during ownership. Understanding how capital gains tax works can help you plan your sale strategically to minimize your tax liability. The difference between the sale price and the purchase price will be the capital gain, taxed in the year you sell the property. It's important to be aware of the tax implications of selling your property, as this can impact your overall return on investment. Consulting with a tax professional can help you navigate the complexities of capital gains tax and develop a strategy that aligns with your financial goals. I'm not a tax expert, so consult with a qualified tax professional for personalized advice. A tax professional can provide tailored guidance based on your specific situation, helping you make informed decisions and optimize your tax strategy. They can also keep you updated on any changes in tax laws that may affect your real estate investments. But these tax benefits are a fantastic way to save and build wealth. By taking advantage of the various deductions and credits available to real estate investors, you can significantly enhance your financial position. Whether you're a seasoned investor or just starting, understanding and leveraging these tax benefits can help you achieve your financial goals and secure a prosperous future. Real estate offers low volatility compared to other investments. While the market can be cyclical, it's not subject to the same massive overnight shifts as stocks. This makes it a more stable and predictable investment. It's a great addition to a risk-averse portfolio. Real estate isn't immune to market fluctuations, but it's generally more stable than stocks. The 2008 housing market crash showed the importance of not over-leveraging and making smart investment decisions. Overall, real estate is considered a more stable investment. One of the most appealing aspects of real estate investment is leverage. This powerful financial strategy allows investors to use borrowed capital to increase the potential return on their investments. By leveraging, you can control a much larger asset than you could by using only your own money. Leverage refers to using debt to amplify returns from an investment. Essentially, it means using other people's money to boost your own investment potential. This can be particularly advantageous in real estate, where property values tend to appreciate over time. You can put down a small percentage and control an asset worth significantly more. For instance, with a 20% down payment, you can purchase a property worth 5 times that amount. This means that with a relatively small initial investment, you can gain control over a valuable asset. This allows you to borrow against your assets to continue investing, creating a snowball effect. As your property appreciates and generates rental income, you can use the equity to invest in additional properties, further increasing your wealth. For example, buying a $500,000 rental property with a 20% down payment can generate significant returns. Not only do you benefit from the rental income, but you also gain from the property's appreciation over time. Even after expenses, you're likely to earn a double-digit return on your investment. This is because the rental income can cover your mortgage payments and other costs, leaving you with a profit each month. Leverage can be a double-edged sword. If used incorrectly, it can lead to financial ruin. Over-leveraging or failing to manage your debt properly can result in significant losses, especially if property values decline or rental income decreases. But if used correctly, it can be a powerful tool for building wealth. By carefully managing your investments and maintaining a healthy debt-to-equity ratio, you can maximize your returns while minimizing risks. Just be cautious and make informed decisions. Educate yourself about the market, understand the risks involved, and seek advice from financial experts to ensure you're making the best choices for your investment strategy. Leverage can skyrocket your investment portfolio when done effectively. With the right approach, you can turn a modest investment into a substantial real estate empire, securing your financial future. The most appealing benefit of real estate is passive income. Rental income, tax benefits, and long-term appreciation contribute to passive wealth. With the right property managers and rental team, the ROI on your investment becomes relatively passive. Real estate isn't completely passive. It takes work to find and manage properties. But once you have a system in place, it can be a very passive way to generate income. If you're looking to build long-term wealth and generate passive income, real estate is worth considering. Who doesn't want to make money while they sleep? The ultimate investment choice. Those are the top reasons why I believe real estate is the ultimate investment choice. As with any investment, there are risks, but with research and patience, real estate can build long-term wealth and financial freedom. Let me know what you think about real estate investing in the comments below. If you enjoyed this video, give it a thumbs up and subscribe for more. Thanks for watching.